Hey, what is up, guys? Welcome back to my channel. For those who don't know me, my name is Mitch, and I make videos about pretty much the topic of credit. So I'm pretty knowledgeable when it comes to credit repair, credit hacks, manufacturer spending, how to build your credit, anything that falls under the category of credit. I'm a pretty knowledgeable guy. I've been doing this for many years. So, anyways, in this video, I wanted to speak about the FICO score myths debunked. So pretty much, I narrow down to like 5 or 6 questions that I get asked on a day-to-day basis. And I guess this is just a selfish way to make this video to kind of direct people to, if they have this question. But anyways, I hope it helps you guys. Please feel free to subscribe if you want to learn more about credit. But anyways, FICO score myths debunked. So one myth that I get asked is a poor score will stay poor forever, and the answer to that is, I'll reveal it, is no. Fact is that FICO scores are based on a snapshot of your credit behavior. As your behavior changes, so will that snapshot, and healthy credit decisions such as paying your bills on time as agreed and waiting for negative items to actually age will cause your scores to improve over time. And what I mean by age, guys, is that after, let's say for example, you have a collection account on your credit report. Regardless, it's gonna stay on and it's gonna be bad. But for example, the first year, it's gonna actually hurt your credit score for like maybe 70 points or 50 points. And then the second year, as that collection account becomes old, it's not new, it starts to not affect you as much. Still affects you, but instead of being 70 points, it's only going to affect you maybe 50 points. And then on year 3, so forth and so on. So again, if you have a recent collection account, it's going to hurt you more than having a collection account that was there for a couple years, like a couple years back. So I hope I was able to explain that to you guys. Number 2, checking my own FICO scores will lower my credit scores. I made another video about this, but I decided to throw this one in here because I get asked this question a lot. And let's see. Sorry, guys. So, checking your own credit scores will never 100% affect your credit score. It doesn't hurt your credit. You can pull it up 2,000 times per day. It will not affect you whatsoever, as long as it's you. And what I mean by you is that you're checking Credit Karma, Credit Sesame, Experian, My TransUnion, My FICO. Third-party websites like that you're checking it for yourself. If someone else checks it for you, and I don't mean like if you gave me your password and I'm checking it, it's not going to affect you. But what I mean is that if you go to a bank, if you go apply for a car, like big companies like that, it will affect your score by anywhere from, depends, about 5 to 11 points from what I've seen. And it will stay on your credit report for 2 years. So just throwing that out there. Number 3 is, I have a large do you have to have a large income to have a high FICO score? A lot of people think is that, believe it or not, the FICO algorithm or FICO score is not biased. They don't care if you're poor, they don't care if you're rich. All they care about how good you pay back your debt. So pretty much how your patterns of behaviors on paying your debt back. So I know guys that make $100,000 a year and have shitty credit score, and I know guys that only make $20,000 a year and have the best credit score. Like it mind blows me. But anyways, let me show you guys the answer. Well, the fact, your income does not affect your sorry guys, your income does not factor into your credit score. Believe it or not, I actually wrote these answers. I don't know if you guys know this, but I'm not diagnosed 100%, but I'm dyslexic. But anyways, but yet, I've been able to be very successful. So nobody that is dyslexic should have that as an excuse that they, blah, blah, blah. Because I read everything backwards, and I just take a moment to process things, and then I reread it again, and it comes out properly. Anyways, I just throwing that out there. Maybe you guys want to get to know me a little bit better. I'm sorry, I didn't mean to pause this video, but believe it or not, if you guys ever hear me speaking, I will actually, you'll start seeing my dyslexia more often. And actually, I'm actually diagnosed with something else where my brain is always going to say the opposite of what I want to say. So for example, if I want to say December, my brain will jump to November, even though I know that I want to say December. Anyway, sorry, this is not about, you guys don't care about my fucking problems. But anyways, I don't know if number 3 or 4, I think this is number 4. A generic credit score is the same thing as a FICO score. And if you guys don't know what I mean by that, let me explain. Not all credit scores are FICO scores. FICO scores are the most widely used credit scores and are used in over 90% of the United States credit lending decision. Again, if you watch my previous videos, you guys will understand what a Vantage score is and what a FICO score is and what a FACO score is. Yes, FACO with the FAKO. Again, Vantage is a FACO score and FICO is your real FICO score. Again, they use different modules. Please feel free to check out my other videos, and I think I do a very good job explaining that. So, again, so one more, guys. I believe this is number 5. My FICO score isn't important. I get this question especially if you're 18, you're 19 years old, and you hit me up. You're like, oh, I don't care about credit. I can't tell you how much this is far from the truth. If you're 18, the first thing you should do is actually get a credit card, because you want your average age of credit history to be long, okay? Creditors like to see people that have been able to manage credit cards for a length of time, not for like 6 months. It gives them kind of weary, like. But if you've been 18 and then let's say you're 22 and then you want to apply for a $10,000 loan, guess what? You got a credit card since you were 18 and you were being responsible for that. Guess what? They're going to give you that $10,000 loan. Anyways, I need to show you the answer, because I spent my good time writing this, so I'm going to show you my answers. When you apply for a new credit or a new loan, your FICO scores may impact your ability to get the best rates. Best rates, terms, and promotions. In fact, high FICO scores could save you thousands of dollars. I can't say this enough. I know I have a cousin that we both bought the same Honda Civic car. I'm only paying 2% interest. He's paying 18% interest. And to him, I guess it's actually, he thought he got a good deal because he used to pay 29%. I'm not the type of guy that I'm going to put you down. I was like, dude, you're going to pay $10,000 more for the same car that I have. Let that sink in, guys. So again, guys, I hope you guys learned something new. I hope you guys were able to value this information. Again, if you're into credit, you want to learn more about credit, please feel free to DM me, as the credit world always changes. And please feel free to subscribe. If you like my videos, give me a thumbs up or give me a thumbs down. If there's something that you wish I would fix in my videos, please let me know. If there's something that you want me to make a video tutorial of, DM me, guys.